So, good afternoon, good evening, good morning, wherever you are in the world. This is Andrew Turner, and we're going to be kicking off this event in a couple of minutes. We're just waiting for people to join. Thanks everybody that's been participating today. Thank you for the panel. We'll introduce in a second. Okay, we'll give it another couple of minutes, and then we'll kick this thing off. Okay, let's get kicked off then. It's just after 2:00 here in London, and obviously slightly earlier in the US. So thank you, Andrew, for joining us from sunny California. And we'll just kick into the agenda for today. So the Insurance Data Roast. Welcome, everybody that's joined today, where data disasters meets expert insights. And we've got some great experts on today's panel. Your host today is myself, it's Andrew Turner. I'm the GM and Chair Advisory Board for Praxi, based in London. And on our panel, we have the esteemed Mr. Alasdair Anderson joining us from, looks like, somewhere in the Netherlands. Hello, Alasdair.
Good afternoon, Andrew. It's Amsterdam, to be precise, and delighted to be here with you.
That's great. Thank you for joining. And I think a bit further east, we've got Mr. Edosa Odaro. Hello, Edosa. We can't hear you. I think you're on mute. No, not yet.
Now?
Yep.
Excellent. Thank you for having me. It's great to be here.
Okay. Thanks, Edosa. And finally, Mr. Andrew Arn. How are you? A bit early for you today.
Very good. I've been up for a little bit, so glad to be able to join.
Cool. So in terms of today's session, we thought about how do we continue to talk about topics that are relevant to the kind of customers we're talking to, the customers we're working with across the world with Praxi. And obviously people have probably heard about what a roast is. It comes from the American comedic, I suppose you could say, fraternity, where usually an individual goes up and people get roasted. We're going to do a slightly different take on that today. We're going to pick a particular topic, and then each of our panel members is going to make a roast comment about that from their experience and from their understanding of what that topic's about. And then we're going to do some roast awards at the end, where we're going to get the audience to vote for the best roast of today. And then before we finish off, we're just going to give you a bit of an update on our latest edition of the Praxi platform, our SaaS edition, which is called CAS, Curation as a Service. And Andrew Allen's going to take us through a little bit of a guided tour on that for a few minutes. And then we'll do an open Q&A and explain what's next. So that's the agenda for today. So opening up the roast, let's get into it. Are you all ready, panel? You ready to go for this roast?
Gasping, let's do it.
Let's do it.
Let's go.
Okay, Insurance Data Roast. So the first one is about when algorithms go wild. So who's going to go first? Alasdair.
I'll step up, yeah. When algos go wild. So my entry into the roast is when risk assessment AI came up with the answer that every red car in the country was high risk. And this was based on a skewed data set put together by someone that drove a Toyota and once got dumped by the owner of a Toyota. So therefore, red cars were the highest risk.
That's a good one. Thank you for that, Alasdair.
That's funny.
Edosa, have you got one to top that?
Well, that's just what Tom said, but I think there was something about a predictive model that somehow confused, the fact that people with I think a vowel or something in their names would file higher water damage claims or something like that. It was ridiculous. I don't know, does that top the Camry? I'm not so sure.
I think he's vying for first position there, I think. And what about you, Andrew?
I just heard, I have some anecdotal stories about, basically, everybody wants to use the sexy new tool, whatever AI widget that's out there. But, the vast majority of the insurance companies out there still use like the same data sets they've always done. So really, they really can't perform those old mainframes. The way to do it, obviously, is to get more data. So, it's not cutting edge if you're still using mainframes.
Oh, well, we'll get onto that. We'll get onto that kind of topic a bit later, actually, because that's one of the other roasts. But I don't want to display that too early. I don't want to kind of show a bit like too early. Anyway, okay, let's move on to the second one. So let's look. Correlation causation. So let's whiz back to Mr. Alasdair Anderson in Amsterdam. What is your roast of this one then?
Well, I am in Amsterdam, but I will be watching the football tonight in Glasgow, where the magnificent Glasgow Rangers beat Fenerbahce of Turkey. Which reminds me of a joke, or probably a true story from Glasgow. So when you go to the football in Glasgow, you park up your car and a wee guy will come up and say, give me £1 and I'll watch your car. The guy goes, no, it's okay. The dog's in the car. The dog will watch the car. To which the wee guy responds, does the dog put out fires as well? So in the insurance industry, there is a mysterious link between people with a reduced risk of burglary and dog owners. Correlation or causation? Who knows? But given the amount of small dogs I see in Amsterdam, I doubt there's a correlation.
That was a good one, that, Alfred. Thank you for that. Right, Edosa, you got to beat Alasdair now. Come on, let's get that roasting going on.
Oh, this is getting intense now. This competition, Alasdair. Where are you getting the stories from? No, listen. I think there was from memory. I think there was something about premiums being charged, higher premiums being charged for customers who had a certain type of script, a certain type of font in their email signatures or something like that. I mean, that was just ridiculous. I mean, it's this whole piece around is correlation going crazy, and people always picking it up, and algos picking it up as if it was the cause. Yeah, something like that.
So was it sans serif Times Roman, or was it to home?
Yeah, it might have been sans serif. I think I'm not so sure now. Yeah, it was something like that.
Maybe it was Arial. Yeah. Okay.
Yeah, it wouldn't surprise me. Does that top Alasdair? The important point is, does it top listers?
Oh, is it? Okay, there's no pressure. Okay.
No pressure. There you go.
Well, you see, let's see if Andrew can come up on the outside lane, kind of like an overtake both of you.
Well, did you know that if you eat more ice cream, your chance of shark attacks increases, according to the internet? So apparently you also get higher health insurance. So there actually is a statistical correlation if you torture it enough to where if you eat ice cream, your chances of shark attacks increase. So basically don't eat ice cream. That's the answer, which is terrible for me.
Well, are the sharks glue fiends, sugar fiends?
Exactly, they're lactose intolerant. Actually, that would be a good thing, right? They'd avoid you. Anyways, that was a funny story I came across.
Right, so let's move on to claims now. The Claims Hall of Fame. Back to Alasdair in Amsterdam.
Well, if anyone's been in Amsterdam for December 31st, they will realise that health and safety does not exist in this country, and fireworks are some sort of human right. So the case in mind was someone who claimed for lightning damage on the basis of an indoor fireworks display.
The fireworks? Oh, wow.
They claimed what? Claimed for
lightning damage.
Based on fireworks?
Yeah, based on setting fireworks off in the front.
Wow. And that wasn't you?
No. I set the fireworks off outside and they went into the front room. That's completely legitimate.
That's a good one. Edosa from Slovenia with a bright orange background.
How do you top a claim like that? I think the best I can think of. I don't think, to be honest, I don't think it can be a real story. It's got to be a. Some of them are partially believable, some of these stories, but this one is way out there. I think this is something about a fortune teller. I mean, they do exist, fortune tellers, clearly, but a fortune teller raises a claim about some sort of business interruption of their fortune telling business, I suppose. But how can it be that a fortune teller couldn't actually see that coming? That's that's a separate conversation. But is that a real claim? I'm not quite so sure. I think it might have been kind of a bit way out there.
Okay, that was a good one. But I think you need to do some more homework on that one.
I think the important thing is that I feel like that topped Alasdair's this time, which is my objective.
Wow.
For being wild.
Okay, bring us home, Mr. On.
Apparently, there's a couple of insurance automobile claims, property and casualty, where cows have fallen from the sky. And I was kind of poking around, and actually, this has happened a couple of times. It happened 1997 in the UK. A cow fell off the side of a hill and landed on a car. And it happened again in 2007. A scant 10 years later, in Washington, a cow actually fell off a cliff and smashed a minivan. And fortunately, the family inside was fine. But yeah, cows falling from the sky. So cows, I guess this was a smallish cow, only 600 pounds. But yeah, totally flattened the car. So real claim.
What was causing the cows to be so depressed?
probably like InsurTech webinars. This rag. It was generative AI that made him do it.
Right. So let me bring this back to the right. So next one. Here we go. So that Flames hold. That's 3 down, 4 to go. Now, this was a bit of an interesting one. Legacy. We call it the digital dinosaurs. And over back to Amsterdam, Mr. Alasdair Anderson.
Well,
Please submit your roast.
You could have so many in here. So my entry is the mission critical system running on Windows 95 with a sticky note on the top of the screen saying "Do not upgrade." And that is 100% real. And actually, I've been noticing when screens go out at Schiphol Airport in Amsterdam, there's a lot of Windows 95 there as well. So it appears that it's still the backbone of most technology.
Good one, that. I like that one. Edosa.
Which legacy? I mean, there's just I think there's tons. It's just which one's the most ridiculous you've ever heard? I think it's got to be something to do with, not so recently, but it's been kind of out there. This whole piece around cloud and what people perceive it to be. And there was this story about a CIO who honestly believed that the cloud computing actually had to do. I know it sound a bit strange, but with this guy kind of up there. so yeah, it sounds strange, but it's actually happened, and it's happened actually a few times.
Is that where Buzz Lightyear comes in? Is to infinity and beyond?
Perhaps so. but you can imagine the concern, right? If you're trying to lose my legacy to put something out there in the cloud, so I have no control. It kind of makes sense.
Okay, thanks for that, Edosa. Andrew?
Digital dinosaurs, not particularly about insurance, but I guess it probably applies. There was a time when I worked for a company, which will remain nameless. Essentially, it was a stock exchange, not the New York one, but the one previous to that, had a post-trade system, and it would reconcile trades. Like, you moved X billions of dollars to somewhere else. I sold something to Alasdair. Alasdair has a sub-account, Edosa, and the logic behind that had been established maybe in the 70s. And everybody who created that application had either moved on or passed away or retired, and they were just not available. And no one could figure it out. So rather than fixing it, we virtualized all the mainframes and ran them in the cloud. And we spent probably, a good 9 months replicating the environment for the mainframe instead of just figuring out what the heck happened. So this actually is quite commonplace. And there is an interval for many legacy insurance companies where their actuarial tables and calculations are still run on a mainframe. And a lot of times it takes about 6 months running full tilt to calculate premiums. So it just works out that every 6 months is a nice cycle for a new premium. But I suspect that that is still true today.
So the old adage, the mainframe is dead, long live the mainframe.
It turns out that the ZOS programmers are like one of the best paid programmers available right now. They have the best job security. No one can.
All 5 of them.
Whoops.
Oh, you're on mute, Andrew.
Okay, then home straight now. The final furlong. So number 5, data privacy, the emperor's new clothes. Back to Alasdair in Amsterdam.
I will give you my entry, which is the perennial challenge of how to use production data in test. My entry is a real thing. Some of these all might not be so real, but this is super real. And it is the process of duckification. So in order to bypass internal controls for using production data in test, a crack team of programmers came up with the process of duckification, where they removed every first name and last name and replaced with Donald Duck. Obviously maintaining the size of the data set, but somewhat losing the fidelity of the data set. But that was seen as a viable solution, so much so it made it into a business critical replacement of a legacy system. There you go. Duckification.
Wow. That sounds like a computing Hall of Fame one, that does. Okay, Edosa, can you top that?
Well, I'm not so sure. I think I can actually. I think that there's a story that, when it comes to anonymization, that's it's a hot topic, isn't it? This you sit around. It might not sound the most exciting thing to most people, but it's certainly a hot topic for people in the data and certainly the privacy space. But I think the one that comes to mind, when you sit around a table, everyone has an idea, everyone has a suggestion. Is everything from let's change this character, what's that rule, or whatever else. But then someone come up with this great idea of changing the actual names, customers' names, to their favorite ice cream flavor. Like, who comes up with something like that? I mean, how do you even find their favorite ice cream flavor?
It's to attract the sharks. It's to attract the sharks.
All rules to come up with, but I do think that tops up this.
That's a pretty good one, actually. That's pretty good.
Yeah. Sorry, Alasdair.
Andrew.
Oh, I don't think mine is as funny. The thing that actually kind of comes to mind is, the different modes in which we interact with data. So for instance, if you want to interact with your privacy data or your financial data, you want to do so in a mobile platform. Well, that has a lot of compromises, and that can actually be quite problematic. The biggest type of scenario like that is, I think it was early in the conflict in Ukraine. A couple of Putin's bodyguards were using this fitness tracker called Strava. I don't know if you know this, but like all these bikers use it, and they like compare their stats with everybody else. But it has geolocation.
Runners use it as well, actually. Runners, bikers. I think it's sports. It's an all-round sports thing.
Anything that requires distance, you need geolocation, right? You need geolocation and you need time, which is really bad if you're kind of in a conflict and you're guarding really like important people like Putin. So basically, for a small window of time, they were able to track Putin, not through any crazy like sci-fi technology, but they just used the fitness tracker. They figured out who the bodyguards were. They were just tracking their workouts. So likewise, you probably need to be careful with, insurance and financial mobile apps.
That's very true. Very true. Okay, that was a good one. So let's look at the next one, which is, have a look. Keeps jumping around. There's some little thing here. Oh, there we go. And number 6, actuarial science, where maths meets mystics. Oh, we're getting really saucy now. Back to Alasdair in Amsterdam.
Okay, so my entry is commonly known as the Obi-Wan Kenobi story, where an actuary was challenged about the pricing model through the power of math. The response was more of the sort of Jedi nature, and that the pricing model was, of course, correct because he had a strong feeling about this.
The force was with him strongly. Yeah. Okay.
Exactly. Always.
Okay, Edosa, can you beat that Star Wars story?
I think it'll be challenging for anyone to beat Obi-Wan. That's a tall order. But anyway, listen, tricky one. I think there's one that comes to mind. Where there's some sort of risk factor that was supposed to be linked into climate change of some description, but ended up actually being linked to some sort of zombie apocalypse type. Yeah, no idea. I mean, it was a stranger sort of story, but apparently it did actually happen. Some of these stories, I think, need some fact checking. By the way, I think some of these stories are a little bit on the wild side, but but they're kind of out there, and they're very, very interesting.
Cool, thank you.
That's my entry.
Thank you for that, Andrew.
Don't know if this is true elsewhere in the world, but I think there is such a thing in the UK. But in the United States, the federal government has this really funny publicly available list. It's like the death list, and they actually track official deaths in the United States. And it goes out to a bunch of people. It'll go out to like the voting office and stuff. But insurance companies also pick this up, and they use it to figure out life insurance claims. Right. The only problem is every once in a while, they screw up the list. And so when that happens, of course, they think either the wrong people died or, deceased people haven't died, which is a really funny story, but it can create an entirely like long domino effect of really horrible things, like poor families trying to collect their policies, or people trying to prove they're not dead. So this happens from time to time, but that's just basically over reliance on source data, which is all about classification and verification, which we should talk about later. Even the federal government makes mistakes.
Thank you for that. Right, we're in the final straight here. Let's see if we can finish strong. If we do go for this one, so stream, trying to work out how to use Zoom again. There we go. Right, number 7 of the Magnificent 7. So this is the final one. Interdepartmental warfare, underwriters versus, or is it with, data scientists? Discuss. Back to Alasdair. Thank you.
This is my weakest one, so I'm glad to finish on it, just to give Edosa that feel-good feeling at the end of the webinar. I mean, this is more an observation. Underwriters are probably the main advocates of keeping the mainframe, because that's the way they've always done things. The sort of bind and quote process, all that stuff is almost resistant to change. Whereas data scientists seem to come into the insurance industry thinking that anyone who's, maybe 5 years older than them knows nothing, and that everything can be solved by massive data sets and algorithms. I think the answer to this is somewhere in the middle of focusing on the outcomes. So what is the benefit that you're trying to achieve? This is super uninteresting and super boring, but that's my observation of underwriters versus data scientists, is if they focus on what the objective is, they might actually get on a little bit more. But it tends to be more of a demographic war, in my experience.
Some interesting observations there. Thank you for sharing that, Alasdair. Thank you for that final entry. Edosa?
Do you know, Alasdair, I really like that, because I think I can beat this one quite easily. I do actually like the observation, though. I like it. But there's an ulterior motive here. So I think one that comes to mind is actually this real verifiable story, this one, from very early in my career, where we had this it was a mainframe system, and it was a big sort of migration from mainframe to the screens of Windows, and I'm showing my age a bit here, mouse clicks and things like that, right? While I was doing this migration, the big challenge, of course, like with any migration, was data quality. Data in the old systems not right. And this underwriter, bearing in mind this is a technology transformation, decides that the best thing to do here was to print off all of this data, thousands and thousands and thousands of reams of stuff, and actually mark out and circle out all the data errors in red pen. So go figure. How was that ever going to be fixed in the transformation? That was a great idea at the time.
Surely that would never happen.
You would think not, wouldn't you?
Yeah, but then again, okay, Mr. Arn, to bring us home, the final entry, the Magnificent 7 roast examples that we've gone through today.
Yeah, I think it's more of a concept than a specific example. I mean, really, the interdepartment warfare isn't just one group versus another. It's really philosophy. So the underwriters have the long-standing actuarial tables, and they modify them every year, which is why they want to do things the way they have, because there's stability and ostensibly predictability. Although, having said that, natural disasters like upend the table on a regular basis. But one of the issues with the data scientists is basically they don't have that stability, because by nature, they try to minimize their assumptions to make sure they can get a wide field of possibilities. They're at odds with each other. And actually, I think this is a good thing, because I think using them together will give us a better outcome. However, having said that, the technology is not completely there, besides obviously classification, which is near and dear to our heart. Scientists tend to try to use really odd statistics to calculate certain types of outcomes. And they'll use secondary or derivative data. So for instance, to calculate employment, or not employment, but economic trajectory of a sector. This is a true story, but I can't attribute it to a specific person because of privacy. They developed a very comprehensive web scraping operation and they would check for employment job listings. And based upon the historical values and the types of position, they would guess whether companies were growing or declining, thereby affecting their insurability or their credit worthiness. So that's really fine and good, and it might actually work, but using that alone probably kind of bypasses a lot of fundamentals. Well, insurance, you need to assess the health of a person or a business, and their hiring is it's kind of a pulse, right? It's kind of there, but you could get false positives. So you're on mute, Mr. Turner. Anyways,
it's kind of an indicator. It's not the only one. That's what you're saying.
Yeah, it can get overweighted, is what I'm saying. So anyways, I think what's going to happen going forward, though, is that we do need to look at more different data sets, to predict weather. There's probably some kind of secondary effects to predict weather, but it's still kind of happening. So although it is at odds, I think actually they can help each other. And I think at the end, this is the exact kind of conflict that we need to actually improve the process. I have a little different take on it.
Andrew.
Can you hear us, Andrew?
Yeah, I can. Sorry, yeah. So thanks for going through that roast exercise. We went through 7 different examples, 7 different roasts. So I hope you enjoyed that. And we're now going to do the Insurance Data Roast Awards, and it's your chance to vote. So which was your favorite roast? I'm going to put them up on the next screen. These were the roasts that we actually went through. And who's the best roast today? Algos Go Wild, Correlation Causation, Flames Hall of Fame, Legacy, the Digital Dinosaurs, Data Privacy, The Emperor's New Clothes, Actuarial Science, Maths versus Mystics, or the final one, The Magnificent Seven, Interdepartment Warfare, Underwriters versus, or is it with, Data Scientists. Now, if you're listening to this on the live event, and I can see people in the audience getting ready to press their buttons now, can you please cast your votes now? And you've now got 30 seconds to cast your vote. And then what we'll be doing in the next chapter, the next section, we'll be handing the baton back over to Mr. Andrew Arm. He's going to give us a Curation as a Service tour of the product and the philosophy behind Praxi and what we're doing in Praxi. And then we're going to announce the winning roast at the end of the webinar. So stay tuned. And okay, so I hope you've cast your votes. So let me check. You put them in the chat. If you put the number in the chat, which is your favorite roast, and as I said, that these are roasts that are actually under consideration. So please cast your votes. Oh, we're getting the votes in now. We're seeing all the votes. Yeah, thank you coming in. That's good. Okay. Thank you for that. And so now we're going to hand over to Mr. Arn. So Andrew, could you give us a bit of a little tour around what we're doing at Praxi and what's going on at Praxi and what we're doing with Curation as a Service?
So, hey, if you haven't figured out what CAS means, it's Curation as a Service. So one day there'll be bumper stickers all over the world that say, "Where's your CAS?" So why do we have CAS or Curation as a Service? And the idea behind it is this notion, this adage of garbage in, garbage out. You really need to start with the right data to avoid getting bad outcomes. And whether you're using a mainframe or you're using algorithms or generative AI, especially RAG, you really need to have high quality data and be able to assess the proper use and match that to the quality of data. So we've created a service that helps you check for that. And this is something that can be used to get a quick dashboard view of your entire data estate, all the different data stores, whether it's in databases, semi-structured or unstructured. And you can use this to make sure that your batch processes, backend stuff is working smoothly, or you can surveil for compliance concerns, or you can look for new opportunities, right? And that's what we're trying to do here. So this is an example of our dashboard. It's dynamic, it's modular. So you can slice and dice the metadata that we acquire any way you want. We have sensitive data, assets, overview of across your entire data estate, a breakdown of your data inventory. This all goes and is the foundation for RAG, which is retrieval augmented generation. And the idea behind that, it's to make your generative AI more valid, more personalized. The data that's used for that generation is your data. right? And one of the things that we provide is a completely fired off generative AI process that allows complete privacy behind your VPC, behind your firewall. And the insights that are generated are from your data. So it's not random stuff from the internet or other people, it's actually your data. So with the weightings and the appropriately curated data, those insights should be much more helpful. And lastly, you can track and share these insights, whether you search for data or if you have a conversation, as you can see on the left side, you can share them with colleagues. All that's behind the firewall. It's all surveilled. It's all audited. So it's very compliant. So we feel that this specific use case approach to curating data, and right now we're focusing on insurance, some healthcare, and we're going to go into payments next, and provides deeper insights because we're only focusing on specific use cases. And as I mentioned, one of the things that we provide with our service is references. So that RAG component is using data that we've already looked at, assessed, and curated. So as you can see, when you ask a question and you get an answer on the right, the little pullout, you can see the actual source of that response. And furthermore, we'll tell you where it's from. We'll tell you what types of metadata labels that we've ascribed to it and the confidence levels of those. So one of the things that we can do is we can also take those labels, and in the context of, let's say, insurance, we can provide the regulatory requirements for that label. So if it's identity information, there's certain things that you have to do for safe handling. And if it's another type of data that's maybe low confidence, it's not appropriate for certain types of activities. So basically, you don't want to do a direct campaign with kind of murky data. And then lastly, we have integrations. We realize curation is something that people are really understanding is more and more important as AI takes off. And so we've created our service to integrate seamlessly with your existing stack. People spend a lot of time, social capital, treasure, and training to get their current tooling. We don't want you to abandon those. What we want to do is run asynchronously and provide those existing tool sets with a richer curation of metadata. And then more than that, we also want to be able to sync them across. So if you call something trousers in one application and pants in the other, we want to make sure that those synonyms are linked up, right? So you're not dealing with a bunch of shorts. So that's basically the idea. And then all of the stuff is, of course, tracked, logged. We have the appropriate, security going back and forth. So you found a bunch of stuff. And now what do? Well, obviously you want to do something, right? That's what you would ask a team to do. And normally this is not the most exciting thing for a data team to do. So really we're able to free them from the more mundane activity. So one of the things we are able to do is find certain patterns, synthetic combinations that derive into other things. So for instance, ingredients that would bake a cake, we can identify the cake or identify, different aspects. Or let's say a customer, if you were to combine certain data assets and we know that there is an individual and they did some kind of transaction, bought a policy, made a claim, we know that if it has those, it has this notion, this conceptual idea of a customer or a policyholder synonym in that data basket, right? And so because of that, it is de-anonymized because of those data sets. You need to have special handling. It's PII, it's GDPR, Article 1822, whatever it is. So what we can do is the automation agent will find it, put the label on it, and send you the guidance around it. And it does it automatically as often as you want. This also is true for any governance reporting for certain types of data assets. Maybe it's incorrectly filed or located, or access permissions is not appropriate. But the idea is that we can look for this continuously, and it's a growing set that can be managed. It's audited, tracked, all that wonderful stuff. And the great thing is when we find something, we can push it to those other tools in your ecosystem through the system integrator in the slide before. So you can do things like send an email alert, send a flag, or flag an asset only, and also put it on the dashboard. So Q&A. So basically to wrap it up, we help you understand, discover your data, understand what it is, curate it, and then critically do something. Integrate it with your other tools, let you know that this thing happened, right? And we do this automatically and continuously. Our service is a subscription. So we provide the training models, we provide the terms and those regulatory synthetic objects for those patterns to do those automatic actions. So basically the customers don't have to. And CAS critically makes it available to small to medium-sized businesses in the cloud. We're able to provide it through a monthly subscription. You don't have to buy the bigger package. It is limited to the amount of data. The more data you have, of course, the incremental cost will go up. But you can try it very easily. We'll have a 2-week trial coming up really soon. So you can try before you buy, low commitment, pay by the month. And this is really suited for really a demographic that hasn't been served before, right? Using data to drive business decisions is becoming ubiquitous. It's something that all companies need to embrace. And now we're addressing that need for small to medium-sized businesses. Anyways, that's the exclamation point. Sorry for that.
Okay, so thank you for that, Andrew. In terms of Q&A, and one of the questions we got through was about in terms of use cases. So what use cases are you seeing when you're talking to insurance companies today that are more prevalent that they want to fix? Is there any particular ones that are kind of a recurring pattern?
The question is for who?
The question was for you.
Actually, the critical thing that most insurance companies grapple with is really managing data. It's kind of a fundamental component. Insurance companies have been around for a while, so most data shops have gone through a number of re-engineering, epochs, right, with different technologies. And every time they do something like this, it creates quite a bit of turmoil. They have to keep the business running. Those actuarial tables have to keep running. Policies have to go out. The claims have to be paid. But at the same time, they need to do something like, wow, let's try out this data lake, which may or may not be a good idea. Hey, we need to go into the cloud. And each one of these steps creates turmoil. And they're always grappling with the fundamentals, which is data quality and actually understanding the relevance of all the data sets they actually have. Then, of course, with data scientists, they want to include new data sets. They want to lease data, rent data from other places, and quickly incorporate them. So really just managing the data is problematic. And given the fact that they have a lot of applications and toolings, that application data is siloed from the rest of it. So really, it's around just understanding their data well, right, to make the most of it. So that's kind of the thematic aspect of it, and it's reoccurring. And I suspect that it will stay as a big challenge going forward.
Okay, that's great. Thank you for that. That's very useful. One of the questions I've got coming in for Edosa actually was, and obviously you worked like globally in different geographies and things like that. And are you seeing, this thing about obviously the whole AI phenomenon with insurance companies? Are you seeing people, what are you seeing as a kind of a adoption stage? Are still people still struggling to adopt things, or are they starting small and then scaling up? Is a particular nuance by country that you found, with the countries you're working across? So I suppose those are some of the themes coming up on a question that just came through now.
Yeah, that's a good one. So there, so many different variables. First of all, the fundamentals of insurance, even though there's differences and nuances from country to country, region to region, etc., they are, of course, the fundamentals are still there, still very clear. It's a business that fundamentally requires data and needs to innovate on data, but at the same time it's a risk-based business. And so, risk is something that's embedded in insurance companies globally. So you always find, and people, I suppose, connect that to insurers being, a little bit less of aggressive in terms of adopting new technologies. I think that's just something that is embedded in the shape of the business in itself, not only in terms of who runs it and what it's about, but also the way customers of insurance perceive insurance, right? This is something that you need to be able to trust it. You need to be able to trust that it can help you when things go wrong, etc. Right? So that put to one side. Coming back to the core question of are there differences? Yes, absolutely. And then that's not unusual. That's been happening even before now. Some of it is just down to, regional situation, from a regional sort of kind of standpoint, where people are in the States, very different to where people are in Europe or in the UK, or say in the Middle East as an example. And that's driven by
just the maturity of the ecosystem in itself, regulatory issues or challenges, should I say, data residency, and there's a whole raft of things. So, and when it comes to where we are with AI and Gen AI, all of these things then suddenly matter even more than they've ever mattered before, right? So suddenly when you're thinking about, okay, I need to suddenly now expose my data or create a situation where I can use Gen AI, use ChatGPT or Copilot within my business, then suddenly where data sits, what data is accessed, what data is accessible, all matter even more so than just putting things in the cloud as you would have done, in previous lives, because some of these tools and capabilities are actually deployed out of certain.
So if you're going to prioritize by region, who do you see as being the trailblazers and who are kind of like waiting and see? What would be your kind of stack rank on that? Any thoughts on that?
Yeah, it's an interesting question. If you look at it from the viewpoint of ambition, it's very, very different from the viewpoint of, what are the constraints, right? So sometimes these things don't actually marry up, unfortunately. So for instance, I think a lot of people would know that the Middle East, is really, really out there in terms of ambition, but also financial capability, being able to actually fund huge, large scale projects. But when it comes to constraints, it's also one of those that is quite heavy on the constraint side, both in terms of regulation coming in. There's new regulation has come out. A lot of the countries now rolling out various levels of privacy and governance, actually regulation as well. But also there's constraints around cloud maturity as well. For instance, hyperscalers that are the norm everywhere else in the West and obviously in the US as well. There's the first hyperscaler is just launched now in Saudi Arabia, as an example. So GCP is just launched. There's no AWS, there's no Azure. So when you look at it from that standpoint, you've got this mismatch between ambition and capability and constraints there. But I'd say there isn't like a one size fits all.
That's a good way to articulate it. I think the thing about comparing ambition to actual maturity and ability to execute, I suppose, isn't it? Interesting. Have we got another question coming for Alasdair, actually? This is about, we're now in 2025. We've now got a new, obviously, administration in the US. What are you seeing in terms of spend priorities, in 2020? Any perspective on that you're seeing across the regulated industries and insurance organizations you've been talking to?
I mean, there's an element of wait and see. So what we're seeing is that new investments are sort of paused right now. And certainly in the European arena, people are looking at their dependencies quite hard. There seems to be a sort of an environment where people are thinking about, if the relationship with the US continues to sour, and we cannot rely on the cloud providers or rely on IP protections, what is it that we can do to enforce or really protect our commercial offerings? So it's really an extension of things like data sovereignty, where people were looking at is how transportable is information. That's sort of extended into the services world. But in terms of priorities, people are sort of holding their breath. I mean, I know it feels like the new president has been there for 100 years, but actually it's only been about 60 days. Tariffs have come and gone in the blink of an eye. So that, I think, is going to maintain probably until the summer till we get into a steady state and people figure out by actions rather than words what the intentions are. So I think there's a lot of cautious optimism, certainly in Europe. And there's a lot of sort of local investment that might have been spent elsewhere is probably going to be spent up. So an interesting thing, I mean, it's not the insurance industry, but you see a massive increase in the valuation of European defence manufacturers. At the same time, you're seeing the US decrease because perhaps people think that owning an F-35 that can be turned off remotely is not a great idea for spending a couple of $1 billion. So that sort of thought process is being reflected within the non-governmental world, and people are looking at, how reliant are we on technology that might be switched off, and that cascades into the cloud, into data, and absolutely into the artificial intelligence services. Outside of Mistral in Paris, I'm not sure there's so many national champions. So I think actually long term, the investment outlook is really positive. It's just very uncertain right now.
That's cool. Thanks for sharing that. I think that's a very realistic perspective. Cool. So let me just finish off with just explaining what we're doing next and what's next. If I come back onto the slides and we go into slideshow. So what's next? Okay, so you heard a bit about Praxi. Obviously, we've got a proposition, a solution. We recently put a press release out about Curation as a service being available worldwide, and we'd be keen to speak to anybody that's listening to this webinar today or a future recording. We have some unique capabilities. We've got some patented capability, and we have the ability to help specifically use cases around insurance. But as we see, our hypothesis is that automated expert judge curation is the fundamentally a building block for all these different types of initiatives that you want to do across an organization. And we see it as being a narrow but deep capability as part of an analytics value chain. From an ROI point of view, we've done some benchmarking, and we've got some very interesting results here. If you look at the dimensions of cost and accuracy, as you can see along the x-axis, you've got time. We've got some really good results in terms of time to value, and also time to really good accuracy of our capability. So it's comparing a real situation with somebody who went down a purely services trying to build build versus buy, I suppose, kind of scenario, and the difference in cost and timeline to get to value. So we're pretty confident after installation we can get something within a week, whereas you're looking at a lot longer time on the services side. So that's the whole point of the paradigm shift we're seeing within having intelligent software. But we still need services to wrap around that, but maybe not as the primary core of the actual delivery. So as we said a bit earlier, introducing Praxi CAS, we made it generally available a few weeks ago. It's going to be available very shortly on the Edosa marketplace and all of the major marketplaces. If you're watching this video on YouTube later, you can scan this QR code. It'll take you to a part of our website where you can actually register your interest, and we can obviously follow up with you directly. And we'd love to talk to you about what we could do together. So look forward to your interest and the follow-up. And I just want to say thank you for the team coming on the call today. Illustrious team of Alasdair and Edosa and Andrew. And here are the connection details if you want to follow up with them and connect them on LinkedIn. And if you want to know a bit more about Praxi, then as our website available through email, obviously telephone, and on LinkedIn as well. And we just want to finish off with the highlight, obviously. Who did win? We've counted all the votes, and we're pleased to say the winner is 3, the Claims Hall of Fame. I don't know if that was that affected by maybe the Star Wars scenario. I don't know if it was the Star Wars one, that one. But yeah, well done to the Claims Hall of Fame for winning the roast winner for today. So I just want to say thank you to everybody that's joined today live. And if you're watching this on YouTube, hope you enjoyed today's session. And just a final thank you to Alasdair, Edosa, Andrew, and this was Andrew Turner, a GM of Praxi Data, and your host for today's the Insurance Data Roast. See you soon. Well, that's our next event. Thank you very much.
Thank you.
Thank you.